Hi, I'm Ben Ramsey with Balanced Rock, and I'm here today to talk a little bit about estate taxes, gift taxes, and more particularly 529 college funding contributions. So if those are topics that interest you at all or that may affect your finances in the coming years, then this short little video will give you a primer. None of this should be assumed as advice to you particularly, just general information, and you can talk to us or another advisor or attorney to get more specifics for your situation. But just a few key basics. The estate tax in the United States is a system of taxation where once you pass away, your estate is assessed in value, and if it's over a certain exemption amount, there's a tax. So this is something that's been around for 100 years and in little bits and pieces before that. And the amounts have changed, the exemption amounts have changed, the rates have changed. Currently, there's a federal estate tax exemption of about $11.5 million per person. So for a married couple, you get the effect of both of those put together, so long as you do a certain election called portability on the estate tax form of the first to pass away. So anyway, that means a total of about 23 million in exemption for a married couple, which is the largest it's ever been, if I remember right. Although there have been times where there's no estate tax. 2010 was a year where there was none, and then in the far past there has been none at certain times. But uh, anyway, that is a system that has somewhat recently been combined with the gift tax system. So what that means is you can't just give somebody $1 million without paying a gift tax. And one of the questions I often get is, well, why is there a gift tax? And if I want to give somebody $1 million, why not? Well, the IRS kind of figured out that people would be paying everyone with gifts for legitimate commercial purchases, and then they wouldn't have to pay any sales tax. They would just claim it was a gift all the time. So they had to put a limit on that. Contractors would do work that cost $1 million and do it for free, and then the other person would just also happen to give them a gift, and then nobody has to pay taxes. So it was kind of a way to cheat. So the government reserves the right to tax gifts above a certain amount. Anyway, long story short, there's an annual gift tax exemption right now that's $15,000 per person who gives the money and per person who receives it. So you can give somebody $15,000 in a year and not have to pay any gift tax. Now, if you give them more than $15,000, and this is where it relates to the estate tax, you don't have to pay a gift tax on the amount that's more than $15,000 right now. It just gets filed as an amount that will add to your estate tax when you die. But if you're still under the lifetime estate tax exemption of 11.5 million nowadays, then you would never have to pay that gift tax. So you don't have to maybe think of the 15,000 as such a really, really strict rule if you're unlikely to get up to the 11 million or whatever it is in the future. Now, the estate tax exemption might go down in the future. Who knows? One interesting thing right now that the IRS has said is that for a very wealthy married couple, a senior couple that wants to give away a lot of money right now, say the whole 23 million, that would be a lifetime estate tax exemption. If they give that money away now and it gets filed as a amount much over 15,000, then when they pass away, even if the estate tax exemption by the time they pass away has gone down to only 3 or 5 million, the IRS won't get them in trouble for all this money they gave away earlier when the estate tax exemption was 23 million for a couple. So that's called a clawback if they were to use the new lower numbers, but they said they won't. Anyway, that's a small detail, probably doesn't affect any of you. So let's kind of get back on track what we're talking about here. So the reason I mentioned 529 contributions in the beginning is because whenever you make a contribution to your child's 529 account, or a grandparent makes a contribution to a grandchild's 529 account, it's considered a gift. It's a gift to the child. It's going to be in their fund for college. So sometimes what we'll do as financial planners is suggest to not go over the annual gift tax exemption of 15,000. So each parent can do that. That means two parents could give to one child a total of 30,000 in a year, without going over the annual gift tax exemption. Now, there's an interesting special rule where the IRS allows you to pile up 5 years worth all at once. So you can put in potentially $150,000 from two parents to one child, total of 150 in 1 year. And then what you do is you spread that out over the next 5 years. It's an extra IRS form, Form 709. That's the gift tax return form. And that makes it be $30,000 in each year. And a grandparent could do that, right? A set of grandparents with 10 grandchildren could reduce their estate by $1.5 million in one day and have no gift tax or estate tax due on that transfer because it's for 10 grandchildren. It's going to be spread over the next 5 years. They just can't do any extra gifting during those 5 years because they're already using up the maximum amount each year, unless they don't mind reducing their lifetime estate tax exemption. So it gets a little tricky. You know, we're not estate planning attorneys. We recommend you see a professional estate planning attorney if you have a complex situation. But we are aware of some of these strategies. We've had clients that will put in these large amounts into a 529 because the benefit is you get more compounded growth within the 529, within the investments, and all that's tax-free growth when used for college. So, you know, that's the benefit of a 529 account. So if you can add more money early, then you get that extra benefit of that growth early on. You know, you don't always have to put in the maximum amount. Any amount over 15,000 in 1 year, you can elect to do the 5-year spread, and it divides it evenly over the 5 years. So let's say you put in 50,000 from one parent to one child, then it's going to spread that over 5 years, so it's 10,000 per year. And then what you can do in years 2 and 3 and 4, you can put in another 5,000 in each of those years if you wanted to, and that would count up to 15,000 for each of those years because you had the 10,000 spread over 5 years plus each individual year that you added 5,000 more. So it just divides it up that way. You could put in 25,000 the next year, divide that over 5 years, and that's 5,000 per year plus the previous 10,000 per year. Again, gets the total of 15, still not going over that limit. So it gets a little tricky. Sometimes it can get tricky. You can do it on your own, or if you want to help have somebody like us help you figure that out, we can do that. Or anybody you go to, that's fine. But those are some things to keep in mind when you're planning how much you want to contribute to accounts, whether it's your own children's 529 and grandchildren's, or nieces and nephews, or anybody else. The gifting is per person giving to per person receiving, so you can give money to a lot of different people each year and reduce your estate if you want to avoid some taxes that way. On a related note, while I finish up here, Massachusetts is one of the states that has a state estate tax, and it has a smaller exemption amount of just $1 million. So it's not anywhere close to the large federal exemption amount. And the other thing is it's 1 million per person, so that's 2 million for a married couple, but it's a little trickier to set it up so that you don't lose that first million of the first to pass away. Yeah, so in order to get that portability, to get the same total 2 million, you have to make sure your estate planning is done correctly. And again, we recommend seeing an estate planning attorney, a professional that can handle that for you. So if you have any questions about those things, we're always free to give you some answers and have a consultation. We are always available to have introductory meetings and let you know how we can help build your financial future. Thank you.